You know, what happens when a so-called blue chip company, one of those huge, reliable giants of the stock market, gets hit with a surprise haymaker from the government? Well, investors in ITC just found out the hard way. Today, we're going to unpack a massive stock shock that literally wiped out billions in value seemingly overnight.
All right, let's get right to it with the number that says it all, minus 13%. Just think about that. In only 2 trading sessions, ITC's shares just plummeted. We're talking a brand new 52-week low, sending some serious shockwaves through the market.
So, the thing you gotta understand is this wasn't just some random market wobble. No way! A drop this sharp, this fast, it points to a single powerful trigger. And that's what we're here to do. We're gonna figure out exactly what happened.
Okay, first up, let's look at where the damage is most obvious, the immediate market reaction, the shock to the stock itself.
And here it is the culprit, plain and simple. The entire sell-off was sparked by one single government announcement, a sudden, completely unexpected, and absolutely massive tax hike aimed squarely at cigarettes.
All right, now let's dig into the details a bit. Because to really get why this was so damaging, you have to understand the sheer scale of this policy change. We need to talk about this 50% tax hike.
Yeah, you heard that right, 50%. A report from Jefferies India estimates that's the effective hike in the overall tax burden. I mean, this wasn't some small incremental change. This was a policy earthquake for the entire industry.
So what's really interesting is how the government did this. It was basically a multi-pronged attack on pricing. First, you've got new excise duties. Those are just taxes on specific goods. Then they replaced an old special purpose tax called a cess. And the real kicker? The main goods and services tax, the GST rate, was jacked up all the way from 28% to 40%.
Okay, so a huge tax on cigarettes. That makes sense. But you might be wondering, why did it hit ITC so incredibly hard? I mean, aren't they this big, diversified company? Well, that brings us right to the core of their business, ITC's real profit engine. See, that's the thing. Well, ITC is famous for having its fingers in a lot of pies. You know, everything from luxury hotels to paper to packaged foods. The actual financial heart of the whole company, it's always been this one single product category.
And this chart, it just illustrates it perfectly. Look at this. Cigarettes make up less than half of the company's revenue, right? But they generate a staggering 83% of ITC's earnings before interest and tax. Let that sink in. 83% of their core profit comes from the one product the government just put in its crosshair.
And hey, just so we're all on the same page here, when we say EBIT, that's a key metric. It basically tells you how profitable a company's main operations are, without all the noise from debt costs and taxes. And for ITC, that core profitability, yeah, it's overwhelmingly driven by cigarettes.
Okay, so understanding that dependency is absolutely crucial. With that in mind, let's turn to what the financial experts are predicting is going to happen next. And spoiler alert, it's not pretty. Here comes the analysts' warning.
The analysts see this as a pretty clear and painful domino effect. It goes like this. First, the massive tax hike. That forces the company to jack up its prices, right? Well, those higher prices almost certainly mean fewer people will buy them, so sales volumes drop. And then, as the legal stuff gets more expensive, what happens? It creates this huge opening for the illicit tax-evading market to boom.
And the financial firm Nomura actually put a number on it. They figure that ITC will have to raise prices by over 35%, and get this, that's just to keep their profit margins from totally collapsing. That's a massive price hike to pass on to your customers.
So what happens when you raise prices that much?
Well, Nomura is forecasting a potential 15% drop in sales year on year for the next fiscal year. That is a massive hit to their top-line numbers.
I mean, this slide really says it all, doesn't it? Before this tax bombshell dropped, Nomura's advice to investors was buy ITC stock. And immediately after, a complete 180. Their advice switched to reduce. That is a huge vote of no confidence from the experts.
But, for anyone who's been investing in ITC for a while, this kind of pressure might feel, well, eerily familiar. Which really begs the question, is this a totally new crisis? Or is this just a classic case of déjà vu? If you look back, the years between 2013 and 2021 were also full of high tax increases. And here's the thing, ITC actually did a great job protecting its market share back then. But the stock price itself just languished. It didn't go anywhere. This new hike feels like a painful repeat of that history, except this time it's on a much, much grander scale.
And that really is the key takeaway here. Nomura uses the word unprecedented to describe this tax hike. They think it's not just going to hurt sales and profits in the short term, but that it could actually stifle the company's ability to grow and even find new consumers down the line.
So it leaves us with this one critical question. For decades, the cigarette division was ITC's cash cow, right? It was their unshakable financial strength. But now it's caught between aggressive government policy on one side and what consumers are willing to pay on the other. So can ITC stop its biggest strength from turning into its greatest liability? That's the billion-dollar question.